Good morning, everybody. Hope the week is treating you extremely well. We're going to take a look at the New York Composite Index, the four major U.S. indexes, and then we're going to discuss two areas of the market that have actually gone and made new highs, two indexes that are actually leading us higher. It might be a little bit surprising for you, so stay tuned as we get into that. First, let's talk about the New York Composite Index itself. This is a very similar chart to the rest of the indexes. We have that triple top from last year that pushes us lower. And we make our V-shaped rally right into resistance. Then we get a pullback right to the previous breakout zone. So a breakout and back test. And then so far we're pushing higher. Now the question, of course, is can we break over this 12,750 area? If we do, we have a move that we're wide open really until that 13,250 area. Right? Now, if you are on the bearish side of the fence, what you would want to see happen here is this low get taken out. Because then what you would have is you would have a high, a lower high, and if this were to get taken out, you then have a lower low, and you would have a short-term downtrend that falls in place right there at that resistance. So this is a very nice battleground that is going on between that major resistance level and this previous zone of support. When we take a look at all of the major U.S. indexes, they all look very, very similar. Here's the S&P 500 right there at resistance, makes that pullback and kind of holds this previous zone above the 10, 20, 50 day moving averages. And if we actually put the 200-day moving average on here, you'll see we're above the 200-day as well. So we're over all the moving averages. Remember, we've talked about alignment. What we want to see is we want to see this 50-day moving average get back up over the 200-day moving average. If that happens, we would have the 10 over the 20 over the 50 over the 200, which would be a technically positive occurrence here for the market. So that's really what we're watching is this zone. It's a big battleground zone. And we take a look at the NASDAQ. The NASDAQ is the only one that went and actually put in a new high for the year this week. Right? They had the same pullback, but it pushed above. Now, it is still not broken out of that major resistance zone because instead of having a triple top, the NASDAQ had a downtrend. So it was weaker than the other indexes. So this is really the major resistance zone that I'm paying attention to. It's about 7,300 there on the NASDAQ, and we're pushing right up into it. So same thing. We've got our battleground right there, previous zone of support, resistance. Who's ultimately going to win today? That's what we're paying attention to here. Now, the Russell. All right, very similar. Only one under the 200-day moving average. We have that rejection of the 200-day moving average, this previous resistance zone, a pullback, but it's holding that breakout just like the other indexes, and its bounce is a little bit weaker than the others at the moment. So it's actually below the 20. It's right there at the 10-day moving average, and the 50 is below and the 200 is above. So the Russell on a moving average analysis is a mess. It also was the weakest index last year and still continues to be a lot more messy than the other charts. Now, when we take a look in at the Dow, same kind of setup as the rest of the indexes in terms of this resistance zone, bounces right up into that resistance zone, holds above the 200-day moving average, this zone of support, right, and it's trying to make that bounce. It, too, is stuck below the 20-day moving average. That might have to do with one of the components this week. Airline manufacturers had some concern with it, and that has led to be a DAG on the Dow since it is the least diversified index with only 30 stocks in it. So bottom line, when we take a look at the market as a whole here, this is that major battleground that we're paying attention to. Very clean, right where both the resistance, where the support is. Very important to pay attention to what happens here. Now, let's take a look at actually what has led us higher here. There have been a couple of areas of this market that have made new highs here over the last couple of weeks. We'll start with the telecoms. So here's the NASDAQ Telecommunications Index here. Made a breakout. It did that same back test that the rest of the market did, a pullback last week, but it tested this breakout zone and subsequently has pushed higher and made a new high. So this looks really strong. And we have that clean, bull flag set up over a previous high. That is a very positive for the telecommunications index. When we take a look at the utilities have made a breakout here. So here they are at a new high, and they didn't even pull back. So last week when the market was pulling back, that's these days in here, you see the utilities really didn't come in. Right? They traded sideways and then cleanly made that break to the upside. those two indexes have been leading us higher here. And the last that I want to talk about, this one has not quite made a new high, but it's very, very close to doing so. And that is the NASDAQ dividend achievers. All right, these are solid paying dividend companies, and it is right there at that all-time high zone. What do these three things have in common? They are more towards safety names. Telecoms, you're thinking, large companies paying a solid dividend. Not necessarily a ton of growth, but stable, consistent growth. And you're thinking about utilities. The utility companies, they're not exciting whatsoever, but they pay good yields. And then we take a look here and we have the dividend achiever index and at basically those all-time highs right there. What the market is saying, with this being our leadership instead of something like the semiconductors, which have a lot of resistance overhead, or the biotech zone in the market, which still has a lot of resistance overhead, if we were seeing those lead, right, that would be a more, here's that risk on environment. People are willing to take more risk into these riskier areas where the upside payout's greater. But what we're seeing here is almost kind of risk off areas of the market leading us higher, right? I don't want to put my capital into the higher risk sectors. Let me rotate it into dividend paying utility names so that I can make sure that I get that yield. That's my concern here with this market, is that our leadership names are so more yield plays than anything else. So that's what we're paying attention to here in this market. Again, we've got that clean level on the New York Composite Index and all across the major indexes that we're going to be paying attention to. And of course, we're going to continue to look for leadership in areas in which money is rotating into. At the moment, it is those safety names. We'll see if that can continue, or if we finally get a breakout and we see capital flow back into more risky areas like the semiconductors, like the biotechs, etc. Stay tuned. We'll see you guys next week. As always, take care.